Hello. Welcome back, friends, to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. Well, it happened again, friends. Another ugly sell-off day as we now reel 50% down from the highs in early November. I hope you made it through the last couple of days with all of your Bitcoin. And what we'll do today are examine the fallout of the sell-off. We'll look at the futures market and where it has reacted to this action. We will show some fractals on the Bitcoin price chart that may give us a hint as to what we can expect. And then we will dance around the on-chain space, and I'll show you the spending behavior, loss realization, and what some of the hodler classes are doing as this price action unfolds. If you enjoy my content, make sure to give my video a thumbs up and subscribe to my channel. Turning on the bell icon will alert you to all my videos the moment they come out. Giving me that thumbs up and the subscribe helps YouTube to recommend my channel to more and more people, and I appreciate your support. I noticed in editing that there's some background noise at various parts of the video today. My child was watching TV and I guess some of it bled through the microphone, but it doesn't interrupt your ability to hear me. So just be aware that if you hear some chatter, it's just my kid, and I'll try to mute it out next time. So let's get into it. Well, it's been an ugly couple of days, and the question on everyone's mind is whether or not we've seen the worst of it, now sitting here around 35,000 for price on Bitcoin. When we spoke the other day, we were still above 40K, and we were wondering if we would hold support around this level. We had seen a curl. There was strong buy support on the dip below 40K, but we weren't confident. We weren't sure that that was the worst of it. We were looking for positives, but there was still a lot of hesitation in the market and a lot of clear uncertainty. In the last video, one level that we pointed out as being very important was this one right here, was 39,600. And since 39,600 has been such a strong pivot point for price in the last few months, I expected that if we did not hold that level, that it was very likely that Bitcoin would want to range in the lower half of where it had been for the last year. And that's because Bitcoin is a big ranging beast, and it likes to do this. It likes to test the higher and lower ends of ranges for long periods of time and really just scare people out of boredom. That's what we're seeing right now. If we pop over here and look at all the major indexes, we can see they've all now made their way well below their 200-day moving averages, which is something we talked about in the last video. And all of these major indexes, the S&P, the NASDAQ, and now the Dow, are in or approaching official correction territory. The NASDAQ is well in there, now 15% down from the high. The S&P is almost 9% off, and the Dow is down 7 points from the high. And as I spoke about before, these big indexes do not like being below their 200-day moving average. This triggers a lot of de-risking by algo traders and bots that have certain rules in place for rotating capital when criteria are met. And breaking below the 200, closing a daily candle below the 200-day is one of those criteria for a lot of traders. So unless the week opens a bit stronger and we actually see some of a relief rally forming, it's possible we spend a bit more time down here. The move down was just so sharp, and it's the very beginning of the year. I think this is one of the worst yearly openings for the indexes in quite a while. That kind of price action just really rattles people. So we might have an ugly another week or two before we start to see if this thing can recover. But that's more of a gut feel than anything. And when I look here at the Bitcoin price chart, there are a couple of places that I think I could expect either seeing resistance, or I could say maybe this is where the bottom would be. But again, these are all just probabilities. You know, we broke below this 39,600 level, like I mentioned. And so the next key support from a structural perspective is all the way down here at 29K. If we come over here and look at the Bitcoin CME Futures Daily chart, there are often gaps on this chart here, and they tend to be filled in by price action when it returns to these levels. If we look back in July of 2021, there's a daily gap right here on the CME chart between 34,420 and 32,930. Now you can see the CME Futures hasn't gotten down to that level because they closed on Friday. But when the markets open and the futures price tries to catch up to the spot price, it will come back down here. And if it finds itself near this level, this would be a place to watch to either gather some support or see it rapidly fill. which would take us down to about 33,000. Let me turn off CME and turn on Coinbase so we can see the 24/7 spot market as it relates to this CME gap. So if we see price creeping down here, and it's very close to it now, it's a good chance that we see, some chop around here, some indecision, because the CME price chart is commonly watched by traders and they know where these gaps are. So this is just something to keep in mind as we creep down here towards the middle low 30s. I spent some time this weekend looking for price fractals that may match the current price action. Now, I'll hedge what I'm about to show you by saying that I'm not an expert at price fractals. There's a lot of nuance involved in using them, and they are imperfect. They're just a period of time where price action played out, and while candles have a tendency to repeat similar moves, it's not always guaranteed, but they can give you an idea of how candle patterns can play out. And when I was looking over the weekend, I found a couple of different fractals that tell different stories. One of them is more scary than the other one. So I'll show you the more freaky looking one first. When I was looking at the price chart, there is a fractal from June of 2021. You can see down here on the bottom, this is a 2-hour chart of the middle of 2021. Here's May, here's the crash on May 19th, the major liquidation, and then June and July sideways price action right here. Now in the middle of this, there was a rally, kind of a sucker's rally in the middle of the June-July weakness that caught a lot of people off guard, and then we crashed again. Well, if you look at this fractal, it strongly resembles the second half of 2021 for Bitcoin. And I've overlaid that fractal up here. Now I'm going to scroll to the right and show you the rest of this fractal. And it's a bit unnerving the first time you see it. So I just want to couch this by saying, again, this is not a guarantee. This is just one possible outcome that we will prepare ourselves for. This is the fractal from June of 2021, and you can see how well, freakishly well, it fits on the current daily price action for Bitcoin. I took this from a 1-hour chart of this fractal down here and pasted it over the daily chart of Bitcoin for the last 6 months, and it fits it shockingly well. It even makes, if I zoom in here, it even makes a high and then a second smaller high, which is exactly what we did in October and November. Let's close the bottom box and get a better look at the fractal here. Okay, so the things that I see about this that could invalidate it is, first of all, this occurred in the middle of a long-term crashing structure, and we came from a much higher area before we got to this point. So there are differences in me overlaying this fractal here. It's not a one-to-one situation. Also, this sharp move down right here, which occurred at the end of this move before price went sideways a bit, there was another last capitulation down to this low area, and then price reversed. But if we actually saw a move similar to this one over here, this would actually take us below the previous all-time high from 2018. Now that is an uncommon event for Bitcoin, but not an impossible one. I've had people point out to me before, Bitcoin doesn't go back and test the previous all-time high. Well, that isn't true. It has done that once before, and I'll show you. These red lines are all of the all-time highs for Bitcoin. And you can see right here, we did go back below the previous all-time high once. It happened in 2015 when we broke below the first 2013 all-time high. Now, it hasn't happened in any of the other markets we've been in, but that doesn't mean it can't happen. And I think what we've learned in the last few months about Bitcoin is that it is certainly capable of doing things that we don't expect. And just seeing how well this fits, I like to prepare my mind for all possible outcomes so that I can be ready to interpret what happens. And this is one possible outcome, that we bounce here, we see a rally back up into, this general area, and then we see a final capitulation down to 20K or so. That is possible. And just because Bitcoin doesn't like to go down that far and test previous highs doesn't mean that it won't in the future. The actual sample size of market cycles that Bitcoin has is what? 5? It's a very small sample size. So what it's done in the past is no indication of what it can or will do in the future. It just informs the probabilities of it. So we've got this fractal to keep in mind, this one possible fractal that came from the June month of 2021. there is a second fractal that we can consider, and it came from the middle of 2019, after the capitulation in 2018, and just before the major sell-off in March of 2020. So we've got this crashing structure that came after the 2019 top, after the plus token Ponzi rally. And if we overlay this fractal over the current price, it's not as scary looking. The levels do line up really well. It's actually pretty impressive to me how consistent Bitcoin is with its levels. You know, it's a very consistent beast horizontally. And when I mark off these different levels from the current price, you can see that they line up with levels from this fractal here in 2019. And this fractal is showing us that we have the possibility of visiting 30K. This one is showing a low of about 29,600. Now again, this isn't a price prediction. I wouldn't use a fractal to make a price prediction necessarily. And I'm not an expert at using them. I'm still pretty new to figuring out the best times to employ them. But what I do know is that price action is the outcome of aggregate human behavior, and those things do not change very much. So when you see over time price playing out in a certain way to certain proportions, especially in a free market like Bitcoin, it stands to reason that you can compare proportionally events from the past to the present. So we've got two fractals to consider here. Neither one of them shows a quick reversal out of this area. Both of them suggest sideways chop and eventually visiting the low 30s. Properly low 30s. So these are things that I have in mind right now as we're looking at the chart, because honestly, friends, it just looks like shit. The price chart looks really weak. We've had, 2 straight months of just bleed down. We bleed down, we go sideways. We bleed down, we go sideways, we bleed down over and over again. The market has no strength whatsoever. So we've got to be realistic here. There weren't a lot of folks out there calling for a 50% correction from the highs in November, but that's what it gave us. And I think it's very possible that we could expect another 10 to 15% taken off, because no one really wants this except for the perma bears. A couple of weeks down here in the 30s before finally capitulating below it sounds like maximum pain to me. So this is a very realistic scenario in my mind. So here's a look at our futures dashboard on Coinalyze. We're looking at the Binance Perpetual Future. And I know many of you are probably wondering, TXMC, we've got this big sell-off. Did we actually get any liquidations in futures? Which is what we've been talking about now for a few weeks. We did not. Open interest has not moved very much at all on this downward action. We also see a little bit of a negative funding rate. It's mild, but it's there. And I think right now, it's hard to say this with certainty because the signal is muddled. Other times it is more clear than it is now. But my gut feel is that we have a lot of shorts in here that have layered in positions as price has moved down, and they are completely unthreatened right now. They also have no need to go giga short when the market is kind of doing the work for them. So that might be why we're not seeing a lot of aggression, but a steady, healthy diet of open interest. So I wish that I could show you that we got a big wiping out of this system and that we were reset for an equilibrium in futures, but it's still cranked to the moon. There's still a ton of open interest. In my estimation, they are likely shorts with stops layered all the way up in this range. And it would require price reversing and getting all the way back up here before we'd start seeing these people getting wiped out. But whomever these traders are, it seems that they're not going leveraged short in a notable volume, or we would likely see a heavy dose of negative funding, which we aren't. I want to take a moment and check on our P&L and coin destruction dashboard, because when we get a big move, I like to see what the level of losses were on chain. And if we look here at the net realized P&L, this is the dollar outcome of all coins moved on chain each day, the net outcome. The move on January 21st saw about $2.5 billion of realized losses. This moment was bested in loss total only by 2 other days in Bitcoin's history. One of those days was May 19th of last year, when we had the first $10,000 red day in Bitcoin's history, and on-chain losses were realized to the sum of about 2.6 billion, 2.7 billion. But the biggest red day in history was June 25th. Where about $3.5 billion of realized losses on chain were seen in a single day. And curiously, this day here that saw the highest total of realized losses on chain is very near the fractal I showed you a few moments ago. This fractal here, you see this big wick down here that is suggesting we might go down to 20K. This wick was right here. And this day of loss realization, of total capitulation on chain came right here, directly after that. So it was really like kind of a 24 to 48 hour period here of major losses realized on chain, which marked the end of this fractal. So we did get a lot of realized losses yesterday, and we can see them on our realized loss chart over here, which is now spiked all the way back up to threaten or at least be similar to December 4th. This is a look at the total supply in profit, the percentage of supply in profit. And because of the event of 2 days ago, we've now fallen below the level we were at in late July when price was around 29,000. So here we are in the mid 30s with less supply in profit than we were at 29,000 in July. And that is indicative of the amount of supply that changed hands up here in October and November that has now been pulled underwater. When we look back in history, the last time we had this much supply in profit was in April of 2020, when the price was about a fourth of what it is now, $7,100, $7,200. That's the last time that we had only 62% of the supply in profit. So it gives you a sense of how far we've come from the top and also how much distribution occurred in the past year and a half. That price is now 4 times higher, but we have the same amount of supply and profit as we did in April of 2020. It's an interesting dynamic. And so one of the questions I've sought to answer this week is whom exactly are spending their coins? Where might the activity be coming from on chain if it's there at all? So we're looking now at our spent volume age bands. This is an OG chart on this channel. This is the total spent volume each day broken up by age group. And it's the volume spent on chain, mind you, not the volume spent in the exchanges themselves. Those transactions don't occur on the base layer. And right now we're looking at spent volume from coins that are 6 months and older. And I started here because this is the long-term holder group for the most part. These are the hodlers. And I wanted to see first of all if they are contributing to some of the weakness that we've seen in the past 2 or 3 weeks. Their activity is mostly flat and sideways. Hasn't really changed very much and is actually slightly declining in the aggregate. So here are coins that are only 3 to 6 months old. These would be coins from July to October of last year. So these were really purchased in this area. Now we saw a big swelling of them being spent at the top as they were purchased from the June and July lows back here and then spent into October and November. That level has gone sideways with a bit of an increase in the last few days, couple of weeks. We look at the percentage of daily volume though, this value is under 1%. So maybe this isn't a significant source of spending volume right now. Whereas back here in October, November, it was more than a percentage of the volume just by itself. Here are coins 1 week to 3 months old. These are some of the most recent coins, and these are the holders who have been finding themselves underwater repeatedly. Every time they buy a coin, basically since the early November, they bought and they're immediately underwater. They buy and then a week later they're underwater. They buy and a week later they're underwater. Over and over and over again. This group is getting destroyed, and we can see the volume spending of this group is increasing. So coins are being purchased, held for a couple of weeks, and then spent again. And this volume is increasing. So this is helping to support my thesis that a lot of the activity, a lot of the loss realization we're seeing continues to be contained within the short-term holder group, within the group of investors who acquired their coins in the last few months. Based on the data we're seeing, that appears to be the case. Paper hands who bought Bitcoin thinking maybe they were getting it on the dip. Maybe they thought that we were about to see a continued breakout from the all-time highs. Whatever their bias was, none of them have been rewarded for going long since early November. And the volume of this group continues to increase as new investors buy the coins, hold them for a few days, a couple of weeks, and then spend them again. One final thing I want to look at today is the Mayer multiple. So as we see price showing weakness, many people are wondering where the floor is. We talked about a couple of fractals earlier in the video that showed us uncomfortable possibilities for price. And what I want to look at now is this model, which you can find on checkonchain.com. This is a free website run by my colleagues at Glassnode, Checkmate, and Permeable Nino, and it's got a lot of cool charts on there, this being one of them. Now, the Mayer multiple is based on the 200-day moving average for price, which is this bold red line that goes through the middle here. The 200-day is maybe the most important moving average for traders. It's the most popular. It's used across all asset classes, and the distance away from the 200-day moving average is what the Mayer multiple is showing. Now, each of these dashed lines on here represent a probability band, and they're based on the history of price. So each of these levels denotes a percentage of Bitcoin's price history that has traded beyond that boundary. This line that I have my mouse on right now, this dark blue line, the second from the top, represents the 10% level. You can see it on the tooltip that's following my cursor around. It says 10%, 2.4. 2.4 is the Mayer multiple value, and that's not super important for our explanation here. The 10% is the thing to remember. So if this blue line means that only 10% of Bitcoin's price history has traded higher than this value in relation to the 200-day moving average. So each of these bands represents a probability outcome that price would continue trading beyond that level. This chart hasn't been updated in a couple of days. I think they manually update this website, but we can still use the bands in part of our discussion here. So let me zoom in on the most recent price action, and we can really dial this in. So the last time this chart was updated was on the 20th of January, so it doesn't show the recent move down. Price is actually down here somewhere. But look at these two bands, right? So this band that's the second from the bottom is at 39,000, and it represents the 20% level. So what that is saying is that only 20% of Bitcoin's history has traded this far below the 200-day moving average. That makes sense? So this level down here, which is currently at 29,000, represents the 10% level. And that means that 90% of Bitcoin's price history has traded above this distance below the 200-day moving average. So in other words, if price were to get down to this point right here, what that means is that using only the 200-day moving average as an axis, there's a 90% chance that this is the low. That's the way to interpret the Mayer multiple bands. This doesn't give you the full picture of the market. We know that there's derivatives to think about. There's the macro picture to think about. There are on-chain dynamics playing out that are also weighing on the market. But day to day, traders and investors who make decisions about whether to buy and sell are using popular indicators, and this is one of them. And when we see price get down to where it's now between these two values, it's about 35,000, it's about right here. That means that only about 10 or 15% of Bitcoin's history has ever gotten this far below the 200-day. About 85% of Bitcoin's life has been spent at a higher value in relation to that axis. So when I think about where the bottom could be, when we look at this price fractal, which shows us maybe 17, 18, 20K, when we look at this price fractal, which shows us maybe 30K, maybe 29K, and then we've got the Mayer multiple here, which shows us that 29K has a 90% chance of providing the floor based on the 200-day. That gives me some confidence. It makes me think that the odds are improving, that the risk reward at this area is improving. We're much closer to the floor here than we were 3 days ago. That's kind of my takeaway from seeing all this data. And looking out into this next week, there's one macro factor that I think it's important to be aware of and to keep your ear to the ground about, and that is the upcoming Fed Open Market Committee meeting that occurs on January 25th and 26th, which is Tuesday and Wednesday of this coming week. Eyes will be on Jerome Powell and the Fed governors to see if tapering of asset purchases is continuing on schedule or if they are taking a more aggressive stance. I have felt for a while that Jerome Powell has been trying to get the markets to de-risk themselves using only his words, and it seems to be working so far. When we see all these indexes selling off 7, 8, 15%, and the Fed hasn't even done anything yet, all they've done is tell us that they're thinking about doing aggressive things, that they're thinking about being very hawkish. The market is giving Powell what he needs. It needs to de-risk. It needs to deflate itself so that he doesn't have to take so much policy action to try to right the ship from his perspective. Now, right or wrong, whether you agree with his policies, using the pulpit to make the market behave in a way that you want is a lot easier than actually raising interest rates. So coming into this meeting on Tuesday and Wednesday, I will be paying attention to the words that Powell uses and the things that he tries not to say. Those are just as relevant as any on-chain or derivatives factors that I could show you for price in the next few days. But while all this is going on, long-term holders are accumulating. We are not seeing spending of older coins, as I can show you here on long-term holder net position change, which is the rolling 30-day change of long-term holder supply. It is growing, just as we noted that spending of older coins is not elevating into price weakness. The supply dynamics for Bitcoin are holding up remarkably well, but the macro landscape is causing the sell-off, and the sell-off is largely contained within this short-term holder group, and they tend to be coins that are of the younger variety, that are of the last month or two, continually churning hands between different investors who buy, immediately find themselves underwater, sell. Someone else buys it, 2 days later, they're underwater, and no one ever finds any relief. So they're playing hot potatoes with the short-term held coins. Meanwhile, futures is almost exactly as it was a week ago and a month ago. It seems that a lot of this sell-off was driven by spot markets de-risking from newer investors. That's my diagnosis of what's going on right now. We are looking for this possible test of the CME gap, which is at around 34,000 down to 33,000. If we see price get down into this range here, it might chop around a bit. These provide the next technical support levels from a price chart perspective. And we're keeping in the back of our minds the possibility that we get a wipeout down to 20K. While this fractal is not guaranteed to play out, price action tends to rhyme with history. It's good to keep all these scenarios in your mind so that you're prepared for any outcome. You can make the best decision for yourself and you don't get emotional when you see the price do something you weren't expecting. So that's what we're seeing out there. It's a lot of ugliness, but we have been through these scenarios before, friends. We've been through wipeouts, we've been through liquidations, and there will be more in the future. Bitcoin is a nascent technology and it leads with volatility. So this is just part of the business of being involved with Bitcoin. And my approach is to prepare myself by considering all possible outcomes, to analyze as much of the data as is relevant, and to create frameworks of possible scenarios. That helps me to manage my emotions and not to let what's happening in the short term affect my long-term thesis, which has remained completely unshaken by any of this. Make sure you're following me on Twitter right here at TXMC Trades. I post a lot of analysis and charts. I posted this fractal last night before it made it onto the video. So if you follow me on here, sometimes you'll get a taste of what we're going to talk about. We'll wait a couple of days, we'll let the FOMC meeting play out, we'll see what the Fed says, and we'll see how equities react to closing last week in absolute bloodshed. Just remember, these are the times in the market where smart money is feeding. Do not give the smart money your bags out of panic. Use the data to your advantage. I hope you're all having a great weekend. I know it can be hard to have good morale when you follow the charts as much as I do and we have this kind of ugliness. But I see myself in the behavior of the hodlers. I see them dollar cost averaging. I see people accumulating supply in dips, buying up weakness, and sitting on it for the long term. That's the behavior that I am exhibiting, and it's the behavior I'm seeing long-term illiquid types exhibiting on chain. They are not spending here, which reinforces our long-term confidence about this asset. All right, I've been talking for long enough. I'll let you guys go. We'll give the market 2 or 3 more days, and then we'll make another video and see what happens. I hope you're having a great weekend. I hope you've found some time to relax amidst all of this stress and uncertainty. We will chat later this week. Take care of yourselves, friends. Be kind to one another, and we'll meet again soon. Cheers.